401. There's one more table here. There's one more table here. Okay, you help me to cross off this term. Okay, this term, I don't need this anymore. And to make your life easier right now, you may also cross off this one for now, because you are not going to see this term in the IG exam, faithful representation. Okay, honestly speaking, these four accounting objectives, they are also known as qualitative characteristic if you study accounting in the future. So here you may write for me accounting objective. For IGCSE, you call these four terms as accounting objective. Okay, if you want to cross off this, you may go on and cross off. So here you have four accounting objectives to study. 1, 2, 3, 4. First one is relevant. Okay, first one is relevant. To be honest with you, these four terms, if you study accounting in the future, you would see a lot more explanation. But for IGCSE, there are not many. Okay, because they are just touching these four terms, explaining to you on a surface level. Okay, they don't go deep into details, telling you what they exactly mean. Okay, or how they link to accounting. Okay, so I try my best to explain to you. Okay, if you couldn't understand any of the terms that I mentioned, then you let me know. I try to explain. Okay, but if you really at the end of the day, after I've explained for maybe one hour or 2 hours, you still couldn't understand, then you may have to wait in the future. Okay, but if you happen to study accounting, then you will learn more on this really. Okay, let's look at the first one. Relevance. Relevance means related, right? Okay, related or relevant. It's telling you that when you do accounting, when you present information of accounting, you must ensure that all the information that you present are relevant. Okay, relevant means it must influence the economic decision of the users. It should be able to influence the economic decision of the users. So what does this mean? Influence economic decision? There's no more explanation from any IG materials, to be honest with you. Okay, so you can for now you can just try to understand try to maybe memorize. Yeah, maybe you have to just to have to memorize. Relevance means the financial statements that you present must be able to influence the economic decision of the user. Okay, in the future, you would even study what is meant by economic decisions. Okay, but I can tell you who are users here. Users are interested parties. Later, you will learn who are interested parties. People who are interested to look at your income statement, people who are interested to look at your SOFP. Okay, and then it further explains relevance, the word relevance. Relevance also means it refers to nature and materiality of your accounting information. Okay, nature and materiality. Materiality, I explained it last week, right? Materiality. Okay. Okay, yeah. Materiality, I explained it last week, is about the value. Okay. Immaterial means cheap, low value. Material means the other way around, expensive. So try to present information that are material to people who look at your income statement and SOIP. Okay. Honestly, I do not know. I'm not very good in explaining these four terms. Okay, because even the IG materials don't have a lot of information. But when you see the exam questions, I will guide you on how to apply the notes here to the questions. It's very easy. Don't worry. Okay, so for now, relevance, it means it means that your financial statements must influence economic decision of users, and it's also related to the nature of and materiality of your financial statements. Materiality and nature. Nature means characteristic. And here, there's one line here which explains material. This one, you ignore it. This one, it comes from other accounting materials, not from IG. Okay, this one you would see it in the future if you happen to do accounting. This one, cross it off. Okay, so relevance means you want to ensure that financial statements that you do present relevant information to people who read it. Okay, present relevant information to people who read it. Next one is easier for me to explain. Reliability. You must ensure that your financial statements that you present are reliable. And that means can be trusted, trustworthy. Your financial statements are trustworthy. To achieve the reliability, you must ensure that your financial statements, you know, right? The income statement and SOFP. You must ensure that the financial statements are complete, neutral, and free from error. So there are three components to reliability. And then we look at them one by one. Complete. Complete means you don't have omission. Okay, you don't have omission. You have not omitted any transaction. So you must ensure that the financial statements that you have done, you have not omitted everything. You have not omitted anything. It must be complete. Okay, you must have all the transactions included with sufficient explanation. Sufficient explanation is something that you will learn in the future. There are more to this sufficient explanation. Okay, we call it as notes to accounts. Okay, which is something that you don't have to learn right now. But for now, you may write down okay. This means notes to accounts, which is something you will learn in the future. But if you want to search it up online, you go on and do so. Okay, notes to account is a part of accounting, but you don't have to learn now. So that's complete. Okay, ensure that you have everything included in your accounting. Don't miss out anything. Neutral means when you prepare your financial statements, when you prepare your income statement, when you prepare your SOFP, you must prepare it objectively. Don't let other people influence how you do the financial statement. Don't let other people influence how you do the financial statement. For example, you are the accountant of a business, and then your boss would like to change certain figure illegally in the financial statement. So the boss tell you to maybe adjust the sales higher or maybe adjust the expenses lower without any evidences. Should you follow? Should you follow the boss instruction? Answer is no, because you must prepare your financial statement objectively. Okay, follow the accounting rules, prepare everything correctly. Okay, prepare everything legally without other people's influence. Neutral. Free from error. This one is important. Free from error, you write down one more term here, major. In between from and error, you write major. It must be free from major errors. It means that certain minor errors are allowable. Certain minor errors that you have overlooked is allowable. Okay, but you must ensure that major errors are avoided. So if a question asks you, does free from error means it must be 100% accurate? Answer is no. Okay, not 100% accuracy. It is only free from major errors. That means small errors can still be allowed. Now you see, without major errors that can be noticed, doesn't mean that 100% perfect, because there are some accounting estimates. Accounting estimates is a very big subject in the future if you do accounting estimates. For example, I can give you some example. For doubtful debts, you agree? Whenever they ask you to calculate doubtful debts, you will be given a percentage, right? Do you have to come up with the percentage yourself to calculate doubtful debts? No, right? You just use the percentage given in the exam, then you calculate accordingly, right? The doubtful debt. This is an estimate. Why? Because if you see the definition for doubtful debt, you try to estimate how much debt you cannot collect from your customer. You try to estimate how much debt you cannot collect from your customer. Agree? So it's very subjective, right? It cannot be accurate. That's why we call it as accounting estimate, and it is prone to error. It is prone to error. Okay, maybe you estimated the doubtful debt to be 5%, but once again, it can be more than 5% or less than 5% because you are just estimating. Okay, you are not very sure. Another example is useful life. Useful life is the you expect for how many years you can use certain NCA. For how many years you expect you would use the NCA that you bought. Once again, it is an estimate. Maybe in the future, due to a certain virus, and you would like to continue to use your NCA because you don't have the money to upgrade. Possible, right? So once again, useful life that you see in depreciation topic, that's also estimate, is prone to error. That's why you cannot guarantee 100% accuracy in your financial statement. Okay, but you have this one free from major errors. Okay, free from major errors. So in the exam, this is something that they like to ask. Okay, for free from error, you must ensure that it's not 100% accuracy. Okay, when we come across some questions, then I will guide you on how to apply. Very easy ones. So reliability, remember these three components: complete, neutral, and free from error. Yeah, so remember these three. Later I show you some questions. Comparability. You must ensure that, hold on, not responding here. Okay, let me continue. Comparability, it comes from the word comparable, right? It means that it makes you being able to compare your financial statements. So what does it mean? I give you an example. In the depreciation topic, we say that for the same category of NCA, you must use the same calculation method all the time. For example, you have bought furniture. Okay, you have bought furniture into your business. If you have been using reducing balance method, then you should not change your method. You must apply consistency, and you apply the same calculation method to the same category of NCA. Okay, if you have been using reducing balance method for furniture, then keep using it. Keep using it. Otherwise, it's going to distort the depreciation amounts for multiple years. Maybe in certain years you use reducing balance method for furniture. Certain years you use straight line method for furniture. So it's going to make the depreciation pattern not regular. Let me explain to you through drawing a graph here. You agree, right? For straight line method, every year's depreciation is the same. It's a horizontal straight line. So here is depreciation. Here is year 1, year 2, year 3. So it's a horizontal straight line. Every year is the same. So it makes you being able to achieve comparability, because if you follow the same method of calculating depreciation every time for the same category of NCA, you will be able to achieve comparability, fair comparability, okay, fair comparison. If you use reducing balance method, this is the graph that you will see, right? It keeps dropping, right? The depreciation, it keeps getting lower. So if you try to use RBM in certain years, try to use straight line method in other years, then your graph would not look either one of these two here. Your graph would not look either one of these two here. Your graph could be looking something like this for depreciation. Maybe for the first few years, maybe you use straight line method, then out of a sudden you use reducing balance method, and then all of a sudden you use straight line method. So it is inconsistent. Okay, you are applying the rule inconsistently, the depreciation method. So this is not able to achieve comparability. not able to achieve comparability. Okay, so this is just one example. There are many more examples. For example, I can use doubtful debt as the example, and there are more examples which I do not know, to be honest. This is the most common one. This is the most common one. Okay, so basically comparability is linked to the consistency principle. For you to achieve comparability, you must first have consistency. You must apply consistency principle. The example that I mentioned just now, for the same category of NCA, you must use the same depreciation method all the time. Don't change the method. Okay, if you have been using reducing balance method for furniture, then keep using it. Keep using it so that you can achieve both consistency and comparability. Okay, now last one before we move on to questions. Understandability. You must ensure that the financial statements that you do can be understood. Okay, very clear to the people who read your financial statements, people who read your income statement and SOFP. So yeah, as the term implies, it's easy to understand, understandable. Okay, you must ensure that financial statements are understandable, can be understood. That means you must have clarity. All the information that you present must be clear in your financial statements. And then this one you may erase. This is not so important right now for IGCSE. Okay, so conclusion about these four accounting objectives. You don't have a lot of questions to practice with. Okay, you don't have a lot of questions for you to apply this, but I show you as much as I can. Let's see some question. This is a page without a page number, but I don't think you have this page. You try to take a screenshot of this page. This is a page after 403. I think recently I updated this handout. You try to take a screenshot, yeah, for this one. Okay, or you use your phone, okay, you take a picture, the G and H. State what is meant by reliability. Okay, so how you should write? You only have to mention the three components. You only have to mention the three components. So you follow me and write the financial statements prepared must be complete, prepared neutrally, and free from major errors. As simple as this, really. Okay, must remember the three components: complete, prepared neutrally, and free from errors, free from major errors. You don't just write must ensure financial statements are reliable. Okay, you will not get any mark. Okay, must have these three components. So 2 marks here. This is an exam question. Okay, this is an exam question. The real exam question. I screenshotted and put it here. Question H. Name 3 other objectives which should be considered when selecting accounting policies. Simple. There are 4 objectives, right? So go on and write the other 3. You write relevance. Must ensure that the information you present in the financial statements are relevant. Then 2 more, you write comparability. And also 1 more is what? Understandability. Okay, like I said, it's not easy to find questions for these 4 accounting objectives. And if I come across any, we do more, okay? Especially when we are doing the past exam papers together.